So here's my favorite tool to be able to search for stocks by sector in less than 30 seconds. Please write the site down, fknol.com, and let me show it to you. So let's say you're on a site and you want to look for, like last year or even this year, momentum stocks. You can click here and it will easily list all momentum stocks. And the part that sucks about investing is that 80% of your time is digging through things that will give you an edge or potentially make you better. But look at this. You have a list of leveraged bonds, list of 5G ETFs, aerospace defense, aerospace ETFs, Africa, right? So we can look through here and scroll and print these out or put these in an Excel sheet for those of you that like Excel. And you can have a list of potential momentum stocks that are available. The site is fknol.com. Or let's say you wanted to go through the dogs of the Dow, which I'll go through later in full. But you can look at Chevron, WBA, Cisco. That's an example of some of the things that you can do. Or if you wanted to scroll down further, and let's say if you want to look at alternatives by hedge fund and private equity, you can then get a list of potential companies. So you see Blackstone, which you talked about last week, as well as BlackRock, KKR, Carlyle Group, IAC, Ares Capital. You can then begin to segment what type of companies or what kind of sectors you would like to be involved in. So let's say you wanted to have some socially responsible companies. This tool easily segments them for you, and then you can have a list. So right here, this is a list of 25. Put 25 in chat for me. A list of 25 potential responsible ETFs that you can invest in. And then if you click here, you can then see the remaining 26 through 47. Or let's say if you wanted large mega cap, you can go here. If you want bond ETFs, you can go there. Iron, Italy, right? That's the great part about this site, is that you can dig in and make up. So kudos to my guy in Stock Club. If we want to look at natural gas ETFs, it will give us the 5 best ones that are currently available. And let's say if we even wanted to look at like dividend yield ETFs. If we want a dividend ETFs, we can click right here and it will give us a list of them here that we can be able to look through. So that way, even gaming, list of gaming ETFs. So this way you never have to depend on anyone or even me to know where to invest. So these, Activision Blizzard, already told you, great. Electronic Arts, amazing. Take-Two Interactive, great. Why? Okay. Zynga has been doing great this year. So now you have a list of companies that you could potentially invest in, and you never need anyone else. I have no financial ties to this company. I just thought it was a great damn resource, and I wanted to share with you guys. fknol.com. Put fire in chat if you thought this was a great resource for you. So I got tagged in this article. A Japanese billionaire invests half of his $100 billion fund into technology stocks, right? And I know you guys have heard me beat this drum forever, but let's break this down. So 60% of the fund is in 2 holdings. So 2 of the top holdings of SB Management accounts for more than 60% of the entire investment portfolio. Now, this son has a net worth of $45 billion. He's in the top richest 30 people in the world. He was 29th on the billionaire list across the world, right? So, and he's also one of the richest men in Japan. And so I'll tell you, you don't have to listen to me, and thank you, Steven, for tagging me in this. You don't have to listen to me, but look at what the top 1% of the 1% are doing, and also what the top hedge funds are doing. So let's look at, and then at the end of the first quarter, doing this, SoftBank reported $17 billion. Absolutely amazing. The largest ever quarterly profit by the Japanese firm. So coming off a recession, coming off the pandemic, they invested heavily into tech, and now you can see what the multiples are now presenting. This is a key lesson. Put this in chat. You want hyper focus on a few excellent companies. I'll say it again. You want hyper focus on a few excellent companies. You don't need 26. You don't need 34. You don't need 50 stocks. Right? Unless you have some great competitive edge that other people don't have, you want hyper focus on a few excellent companies in your portfolio. Let's look at some of the things he invested in. And I saw people even, and kudos to Stock Sharks, I was seeing people say, well, most funds only want 10 to 20% return. Not true. Put yes in chat if some of the stocks that I've recommended have got you over 12% return in a year, and then put the percentages in chat. Do you think these fund managers that are managing billions of dollars just want 10% return? They want minimum drawdown, but maximum upside. Please put this in chat. Minimum drawdown, which means minimum loss, but you want the most gain possible. Amazon, Facebook, PayPal, Microsoft, not a bad four. Google, Salesforce, Netflix, TSM. Great list. You can make the argument NVIDIA over TSM. Shout out to my guy Clint. Clint was asking, hey, what do you think about NVIDIA when it splits? It's going to do well. We have seen historically what splits can do for a great company. And then also, homework. Please write this down. Homework assignment number 1. Go look at the top 25 companies that have split, and then see what the average growth of them over a 5-year period tends to be, so you can understand what the growth could be going forward. Last week, I shared for the first time ever that one of my hidden secrets is to look at Vanguard and BlackRock and see if they own the stock that I'm looking to invest in as a hedge. And me being a minnow and they are whales, I want to follow what the whales are doing, right? So it's a market maker strategy that I am using to ensure safety. Now, to go into that, do a fund by fund analysis, and you want to look at the top 10 ETFs to see what they're invested in. And I could make the argument, if they are not currently invested in, you should probably hold off unless another market maker is in that stock heavily. For me, I'm going to write this down. For me, I need to see the stocks that I'm looking in to be in 7 out of 10 ETFs. Please put 7 out of 10 in chat. That way I'm able to have safety. And even if they reallocate, that's fine. But if I see that a stock that I'm picking between those two entities with that much money under management, if they are only having that stock in 1 or 2 funds, it's usually a sign that it is not that good. Peter Lynch has an amazing quote that pretty much sums up everything that you need to know about investing in one simple quote. Absent a lot of surprises, stocks are relatively predictable over a 20-year period. As to whether they're going to be higher or lower in 2 or 3 years, you might as well flip a coin to decide. And the truth is, the longer that you hold an investment, the higher the return will be for you and a higher the margin of safety. Drawdown over a 1 to, let's say, 3-week period for most stocks, extremely high for my long-term investors that are seasoned. Would you agree with this or not? Now, over a 6 to 12 month period, it smooths out a hell of a lot. Once you get 3 years in, 4 years into a stock, if your stock has not went up from the cost in which you bought it, unless it was a high, and with quality stocks, even if you buy them at tops or highs, within a 2-year period, they should have made new highs by then. This quote tells you everything that you need to know. Please put in chat, I will have the discipline to hold great companies for 20 years.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.